Frank Holmes, thanks so much for joining us again on Wall Street Unplugged.
Great to be with you.
Well, let's start with the elephant in the room, which is the coronavirus, right? You've been head of U.S. Global since 1989, so 30-year plus vet in the financial markets. Have you ever seen anything like this in your life, where unemployment's going to go over 20%, GDP down more than 30%, and even GDP is expected to decline every single quarter this year, right? It's going to bounce back, but it's still going to decline every quarter. That's what's projected. Yet we're seeing stocks rally to where the S&P 500's up over 5% over the past 12 months, and NASDAQ closing in its all-time highs. I mean, does this compare with anything that you've seen in the past 3 decades?
Never. Never. Bad news is good news, and it just also shocked me during this period. There's all this sort of headwinds of fear, and online trading explodes. 2 million people, new accounts. And Robinhood, supposedly brings in, in the month of March, 1 million accounts. Schwab brings in 300 some odd thousand that reported. TD Waterhouse reports over 300,000 new accounts. So the millennials being bored at home are now becoming active speculators in the stock market. I would never have expected that.
Is that a sign of a negative or a positive in your view? Because usually when we see people like that who aren't in tune with the markets and see everything now going up and jumping in, could that be a sign of a top, or is that kind of, is that good that, the market, hey, more people are interested in it than ever?
I think it's really positive, because one of the big parts, as I've noticed from our shareholder base, is that the average age in the mutual fund world continues to rise, and there's not that much new blood, but they started piling in right at the bottom. I know for my JETS ETF, after it halved, all of a sudden the volume from like Robinhood allows you to look at the number of accounts every day in that ETF. And it's unprecedented, from a couple of hundred to 24,000 shareholders in a couple of months. So that happened on the gold ETFs also. So there's a brand new audience of investors that are buying into the American dream, to speculate, to invest for growth, whereas a lot of times they were just out of the market.
Fred, let's get to JETS, because you're one of the smartest people in the world when it comes to airlines, right? So in 2015, you launched the biggest airlines ETF, and that's a symbol, JETS, JETS. And we all know the story with this industry, where pre-coronavirus, I mean, this is a booming industry, right? It was also not that expensive, considering where, record profits, capacity, cash flow records, everything close to all-time highs for most of the airlines. Now we look, coronavirus hit, most of the names got destroyed. Capacity at all-time lows temporarily. Buffett decided to exit the industry. Big headline news. Is this an industry, again, and I know there's going to be bias here because you have JETS, but is this a time that you're buying aggressively, or are you still cautious on the industry?
Well, that's a jump ball, Frank. Is it a U-shaped bottom, or is it a V-shaped bottom? Now, lately I've been hearing it could be a W or a Nike swish. But I think the airline is going to go through a U bottom. I think that unemployment numbers are going to crash and just explode on the upside, as everyone's now going back into the workforce. So I think you're going to get a V shape there. But I think the airline will just be, people will be more cautious.
And do you think it's a huge advantage, because most of these airlines have gone through bankruptcies, and yes, that was a little while ago, but remember, it's been over 10 years since the credit crisis. And, we have a lot of new investors in the market since 11, 12, 13, even new companies and IPOs where, unfortunately, everyone's super aggressive and thinks they're going to grow forever, and nobody holds money for a rainy day. But the fact that the airlines have been through this, just like the Microsofts and the technology companies, which is why they're thriving right now after the tech boom and so many of them went out of business. Do you think it's an advantage going through this type of market where they're going to be much more lean on the other side?
Yeah. Oh, yeah. I think that the rotation in companies, the Amazons just were remarkable what they did. I know in San Antonio, for a couple former employees that worked in my mailroom years ago, work at Amazon, and they were always doing overtime, and all that overtime was slashed, and he went out and just hired more people. And you can see Amazon has performed exceptionally well, and I think the Zoom. Was interesting at the very bottom of this airline industry. Zoom had a bigger market cap than all the airlines.
Incredible. That's incredible stat.
So there's a mean reversion going to take place here, and I don't think Zoom's going to fall as much as the airlines have a rebound. But what I found was really interesting was how many hedge funds came in at the beginning, shorting their favorite airlines that they believed had bad debt levels, and went long jets. Something like $50 million quickly came in. And then we had all the Robinhood and retail investors coming in, speculating. And we did some research, and a big part of that coming in, besides the coronavirus worry about debt levels, but there was a big bet that if you looked at 2000, if you go back to 9/11, 6 months after 9/11, the airlines were all shut down for over a week. They came back on. 6 months later, they were up 80%. And then if you looked at the SARS phenomena, which impacted a couple of years later, but that was predominantly Asia, the airlines jumped back 120% in 6 months. And if you go March 2009 low, 6 months later, the airlines are up. And remember, at that time, they're all bankrupt, basically still flying, but they jumped 80%. So there's a big bet here that the airlines are going to jump, 40 to 80 to 100%. And it's a call. Do you have a V shape or a U shape? And guys like Bill Miller came on television, contrary to Buffett, and was saying that if you believe a vaccine is going to be here in 6 months, then the airlines are screaming buy.
Now, forget about that your company with jets and everything, and someone who's just a student of this market who loves data analytics and followed Buffett for a long time. Were you surprised at Buffett getting out of the airline? Someone that likes to buy things during market conditions like this, when they get wrecked. And this is more of a temporary problem. It could last 3 years, it could last 5 years. Yes, it's going to be different, but this is the opportunity that he really looks for. And yet I was just surprised that he decided to sell out of his airline so quickly.
Yeah, at the beginning, it was a real shocker, Frankie. It was a real shocker. But then, I had to sit back and scratch my head. And in my webcast last week to only registered investment advisors, we had like 900 people registered for it across the nation. And one of the things was I went out and showed some visuals where Buffett said at his annual meeting a couple of years ago, I was too dumb to realize I did not think Bezos could succeed on the scale he has. And another one where he talks about Google. I never thought Google could do what it's done. And that's a shocker because, Google does $1 billion a week of operating cash flow. It's unbelievable numbers, 50 billion a year, and he missed that. And then he said he doesn't miss Bitcoin. And then gold, he always talks negative about gold. But since the year 2000, bullion has far outperformed Berkshire Hathaway. And out of the 20-year run, 16 of those years it's outperformed. So it's almost double of what he's done. And for the past 10 years, my favorite Franco-Nevada royalty company has far outperformed Berkshire Hathaway. So he's been negative on gold. He's been in and out of airlines. At the beginning of March, he was increasing his exposure to Delta. Then he jumps out. And I had to understand him. He's a wonderful investor. He's an amazing steward for people getting into the capital markets and teaching. But he's 90 years old come August this year. And if you look at the data points, the median age of someone dying is 82. And so I think he's much more sensitive about his life. So I can understand that cautious mode because he didn't buy in a lot of industries on this big sell-off, because on previous big sell-offs, he was a big buyer. He bought Goldman Sachs, he bought a whole slew of companies. But this one he hasn't. And what's interesting is that all the complaints of TARP money that took place in 2008, the amount of money now by the Congress and Federal Reserve is 12 times that. And I think you covered that in one of your tweets.
12 times the amount, yes, that we passed for TARP right now. If we pass the extra $3 trillion, and that's not even including the extra $1 trillion that they're looking to pass on top of infrastructure. So yes, I did tweet about that, but it really is incredible. And that leads, let's get into gold because
let me give you something else though on this is what's different though, and what the lessons in my research was that Washington agencies, FAA, etc., and White House and Congress are really cognizant and sensitive that 1 in 15 jobs is tied to the airline industry. And it's a huge multiplying effect. So Vegas is over 95% of the people going to Vegas fly there. There's 200,000 empty beds, 300,000 people laid off. They've got to get people flying to Vegas again to ignite all those jobs. And so you have a big commitment. And unlike 2009, 2008, there was no $25 billion given to the airline industry. So I think there's a real interest besides Buffett switching in and out, but the government committing to this industry to get it back on its feet. I think that you look at Latin America, the governments did not support their airlines, and two of the major ones have gone bankrupt. You're seeing several of the countries in Europe support them. So I think that this is a very different scenario for job creation, and it's election year. So I think if you're not, wheels are up. And when it comes to the Jets, wheels up.
Yeah, and I love talking to you, Frank, because just the data, the analytics guys, listen to this, and listeners out there, it's just understanding and knowing some of the countries that are bailing out airlines and the ones that aren't. The ones that aren't, that's going to be increased business for the survivors, like, even some of the international, the larger ones, United Airlines, United, Delta. But just knowing that data too. That's why I always love talking to you. But I want to switch the focus. Go ahead.
I want one last thing I want to blow you away with.
Go ahead. Let me hear it.
New, besides the data of all these new online speculators and investors, is the TSA started showing the data of how many people they process every day. And it's going to become like a stock chart. So the data comes out, and you can see they start this on March 25th. And by April the 14th, is 87,500 people get processed. That's the low, April the 14th. And what I find is interesting is now over 300,000. So we're up, over 300%, almost 400% from the lows, and people flying daily. We've got a long way to go, Frankie. Last year, it was 2.5 million this time of year. But there's new data. People are using Google Analytics to look for people looking up for holidays, for tourism. That's booming in Asia. So there is a pivot turn, and there's new metrics to look at to say, how do you trade these puppies?
Yeah, and you can just go to the FAA website for that, or where would you find data like that? Okay,
yes.
Great. No, that's great stuff. So, and the reason why I'm going into gold, and I know we could talk, you and I could definitely talk airlines for another hour, but we have a lot of gold investors here as well. So when I look at your company, US Global, you have close to 10 mutual funds, I think 9, and 2 exchange traded funds, which one of them was Jets we just talked about. But let's go into the other one, Go Gold, the symbol's GOAU, which I know a lot about since you graciously invited me to ring the closing bell in New York Stock Exchange. This is 2017, amazing experience. But talk about Go Gold a little bit. And let's what's different from Go Gold from, say, other ETFs like GDX?
Well, the big difference is it's a quant discipline, and that's is the big, very, very important, because what we noticed is the GDXJ was just a basket of small cap, mid cap, big cap names, and the GDX was big cap names, and there was no discipline in looking at metrics. And what we found was that if you looked at just free cash flow yield or cash flow returns on invested capital, you bought a basket of those stocks, you far outperformed the GDX or GDXJ. And looking back over 10 years, it was a 90% rolling 12-month basis that outperformed the GDXJ 92% of the time. So it was very compelling. And the reason for that is a lot of silly mergers, financings that never delivered the revenue per share, never delivered the reserves per share. And interesting enough, 70% of all trading today are done by quant funds. And the quant funds look at different factors than how gold stocks used to be communicated and invested, and how people said, okay, I'll speculate or invest in this gold stock versus the other. It's all changed. And it's much more like how you and I would look at growth in revenue per share, high cash flow returns on invested capital, not the old adage of what's your book value or reserves per share. And so what we found was that there was a process of shrinking from 70 names down to a very tight basket. of 28 names. And then we also notice is that the royalty companies, which I've always loved, Frankie, always, because it's a superior business model, has a moat around it. These companies have the highest revenue in the world per employee. I think of Franco-Nevada and the New York Stock Exchange, over $20 million of revenue per employee, and Goldman Sachs is $1 million. And they have a royalty on Newmont's assets in Nevada, and the revenue per employee for Newmont's less than $500,000. So you're getting a much bigger bang for your buck on the royalty companies, which have huge free cash flow, rising dividends. This particular ETF is 30% those names, 3 of them. They rebalance every quarter. And then after that, it's looking for 5 significant factors that we have identified that just attract the non-gold investor in addition to the gold investor.
Well, Fred, let me ask you this, because it's 30% weighted in gold royalties. And I know all the rules of the fund. Again, Frank and I are friends. I want you to explain it to the audience of why it's different and why it has significant advantage over the other gold ETFs. But when I look at your weighting and how it's increased because you were dead right on something, and we're talking about a market where things just keep going higher and higher. But when I look at the royalty companies, Franco-Nevada trading at 30 times sales, 6 times book, which those numbers are extremely high, maybe the highest in the company's history. And, maybe they deserve those multiples and they go higher. But due to your quant system, do you have a valuation metric where you might reduce those holdings because they've done so well, and maybe go into, large caps, or even, you talk about cash flow yield, but do you completely avoid a lot of juniors since these are companies that aren't generating money?
So what happens, Frank, is interesting. It's a great question. Some of the highest valuations in technology stocks have the SaaS model. That is consistent recurring revenue. When Microsoft went to the SaaS model, from those big marketing glitzes to sell their software, they started piling cash at unprecedented levels. And all of a sudden their valuation starts getting re-rated. And so what the factors to look at is that royalty companies like SaaS models, their change in revenue, the volatility of their revenue is a lot less. And the volatility in their earnings and cash flow is a lot less than a normal business, that recurring revenue. So they're getting recurring royalties. And so they have a little more volatility than, say, Microsoft because of gold. But what happens here is that it's a much safer bet to go buy a royalty company than buy a mining company, which has all this capital, all these people issues, country issues. It's not as tax efficient. So I think that's one big reason why a lot of financial people that own gold, but they don't own the mining stocks, they buy the royalty companies for those reasons. So I think it's, as Pierre Lassonde said, the founder of Franco-Nevada and Seymour Schulich, he said he could pack everyone up and move to Hawaii for 30 years and it would continue to grow.
That's great. That's great. Yes.
That's a great business model. That's a great moat.
Yeah, absolutely. I mean, recurring revenue, if you notice all the business, whether it's Adobe, Microsoft, Apple, you're looking at just recurring revenue through cloud, Amazon, just incredible the amount of cash flow coming in for those companies. Let's talk about the gold industry in general, because I read something in your Frank Talk blog, which we'll get to a little bit later or in a minute or so. You said in November, you saw gold pushing through 10,000, right? Now with $3 trillion spending by the U.S. government, another $3 trillion, maybe $4 trillion on the way, if that includes infrastructure, along with spending from every major central bank across the world, which is everyone's going all in. Do you have an updated forecast? Do you see it going a lot higher than that? Is it like a time frame? Again, it's hard to make predictions exactly what's going to happen, but I think 10,000, most people are pretty much assuming that these days.
Well, when I first said it last year, I got so many hackles from it, and I try to explain to people that if palladium can go from 1,000 to 2,700, why can't gold go to 2,700? Why can't it go to 10,000 if they print all this money? Palladium was going through a supply shrinkage for many years, and all of a sudden the demand is consistently growing at 2 to 3%, and bingo, it all of a sudden starts to take off because there's no new supply for many years. And gold is at peak supply. There's no new big mines coming on, and the Newmonts of the world is basically, if you look at their production profile, I mean, it's so hard for these big companies to maintain it. So I think that we could easily see this money printing. And I remember doing the back of the envelope of looking at TARP and how much money had to go into move the economy, to stabilize the economy there. To do it on this trip, I said it's going to be at least $10 trillion. And once again, we got hackles for it, but it was really, it's what the numbers are coming in at now. How it's come about, first the Federal Reserve, then it's Congress, then it's White House, and now it's the new $3 trillion on the table because it's election year. No, there's no doubt. Seeing today, Germany, I think, financed 5-year government bonds minus 60 basis points, minus 60. I think that gold is one of those assets that a lot of these central bankers are trying to hold down. And I think it can't stay for long. Trades higher.
So you make a good point about central banks maybe trying to keep it down because, and I want everybody to understand this, Frank, you've been in gold for a long time, but you're not a gold bug like a lot of our peers are, where it's gold no matter what. I mean, you're a person that says, I believe you should have 10% in gold. It should be a part of your portfolio, compared to a lot of other people out here that say, go all in, the dollar destruction, whatever. But if people playing devil's advocate, right, gold's used as a safe haven asset. It's a great play on low real interest rates, which counter inflation. It's viewed as an alternative currency to the dollar, especially when, central governments are destroying it by printing, which we're seeing today. Yet we also see during extreme bullish times, especially in the stock market, investors outside the diehards seem to ignore gold or don't want to be in it. And we're in a market that's totally unprecedented, where it's basically our government's not going to let this market fail. It's not going to let it come down. It's not going to let it even come down 10, 15% without injecting more money. Is that a negative for gold in terms of, you want new investors in here? Is that going to be an alternative with stocks seemingly having a floor under them?
It's a great question. I think what's different is that the G20, in particular since 2008-9, have formed a cartel like OPEC. And the central bankers all communicate with each other. And the same thing with the finance ministers. Is synchronized taxation and regulation. Now it's become synchronized spending to get the global economy going at no matter what. And so there's no real competition between one country and the other. They're all helping each other out. And one of those things is listening to various people is that if the price of gold was to start to take off, it would show their fallacy. So somehow they can keep it depressed. Because we did see physical gold, because the airlines industry difficulty of supply lines and the demand for gold, that the physical gold jumped to $134 an ounce over the futures market. And so there is that whole thesis. But I'm a gold bug when it comes to just recognizing it's an alternative asset class. It's the fourth most liquid asset class in the world. It's an asset class that you can wear. It's an asset class that is so portable. It doesn't catch viruses. Viruses can't exist on gold. So there's many of these unique benefits, and the 10% golden rule, that is having 10% minimum and rebalancing once a quarter, once a year, is just prudent. But what really gets me excited, Frank, is that, yes, this is a gold market, and there's a big opportunities now, gold stocks, because the gold stocks have more disciplined CEOs. It's the first time in years they have basically across the board free cash flow. Now, these quant funds and generalists look for free cash flow yields. And what's interesting is in September of 2019, the average free cash flow yield was minus 0.5%, or the 100 gold producers I follow. And then by December, all of a sudden, we're up to 1% positive. So it's just taking time, but all of a sudden, the universe as a whole. So what we're seeing at this March quarter end, when I look at the universe of 100 gold producers, that there's a huge bifurcation of their numbers in having free cash flow versus the S&P 500. So one of the best performing stocks this year at the S&P 500 is Newmont. Guess what? It has a 2% free cash flow. Most of the S&P's gone negative. So money just plows into it. And the royalty companies the same way. I think in the first quarter, they threw off the three big amigos, $500 million of free cash flow. So I think gold stocks are going to be the play here. I was just doing some more data mining, And we looked at going back over 10 years, Frank. If going back 10 years, if you bought stocks between 200 million and 1 billion market cap that had the highest free cash flow yield, your performance year to date is up 33%. The GDXJ is 8%. GDX is 24. So you're 33. 12 months, you're up 80% versus 40%. If I go for a decade, just between 200 and 1 billion, it's a 15% CAGR. That means your money is quadrupled versus the GDX and GDXJ are minus 4% and 6%. So this idea of free cash flow is really important to the non-gold fund buyer. The normal one is the generalists, and the generalists have much bigger pockets of money. And we're witnessing now that big, slow tide changing. They're buying gold stocks.
So let me ask you this, because you focus on the free cash yield, and you talk about royalties, which also means majors, and you could even go down to the mid tiers or producers. But you also think gold's going a lot higher, right? And the market is ripe for that, where we have central government spending money like crazy, right? So say if we have that bullish, we hit 12,000, 13,000 4 years from now. As well as I do the way the markets work. The most, I would say, the worst stocks, which are juniors, right, that don't have any cash flow and don't generate revenue, are probably going to significantly outperform the more high quality names. That's what happens in bull markets, as you know. Do you look at juniors? I know you're focusing on with gold and things like that, and definitely royalty companies. But are there any juniors that you speculate in that you see a tremendous opportunity? Because there are a lot of great names that are still really beaten up in that area.
Yeah, there's no doubt. My big win in the past couple of years has been a company called Grand Columbia. Grand Columbia owed $45 million to the creditors 3 years ago. And today they have $160 million in the bank. I mean, that's a $200 million swing. And on a per share basis, it's massive. So the stock has gone up sevenfold. Eric Sprott recently bought a big slug of it. And one of his biggest wins ever is in Kirkland Lake. Well, Kirkland Lake has the second highest growth in revenue per share for the past 3 years, and it's the best performing North American gold stock. So revenue per share growth, cash flow per share growth, high cash flow returns on invested capital, you just see far superior performance in those stocks. So remember, Kirkland Lake was a small cap. So the Wesdomes of the world is focusing on those types of stocks. And I think the Grand Columbias of the world can trade much higher.
And before I let you go, I have to talk about cryptocurrencies, which is Bitcoin. You're very familiar with this area, being a big investor, even in high blockchain technologies, where you're chairman. I know that you are bullish on Bitcoin, at least I believe so. I don't want to put any words in your mouth, but I guess I want to know your position in Bitcoin, and why is it that so many gold investors, and not yourself, but it's like an either or situation, like they can't coexist and you can't own both. Yet it seems like the fundamentals behind buying gold also exist for Bitcoin, right?
There's no doubt about it. And I think that it's a European attitude, it's a Swiss attitude towards Bitcoin and gold is much more akin to both. As North America gets into this big debate, and Bitcoin doesn't work unless you have electricity, but it's more portable than gold. And so we have this sort of debate that goes back and forth. And I just think it's all nonsense. I think that Bitcoin is going to become like Andy Warhol art. The halving just took place 10 days ago. That is, every time you validate a transaction every 10 minutes, there's half the number of new virgin coins you receive for validating that crypto, what do you call it, the 64 hash, determining that it's a good coin, and you get rewarded in new coins. Well, it's a finite number. And when you get a finite number and you get Metcalfe's law that more and more people believe in it, then you get these exponential moves on the upside. And the last time this halving took place, it's every 4 years, Bitcoin went up over 20-fold. So I think that Bitcoin is going to be that sort of unique product that the collectors are going to want to own. Like I remember Andy Warhol art, the 1,000, he had 4 different colors of Mao, 5 different colors of Mao's face, and he came out at $1,000 a print, and they went to $250,000 a print. So it's things of that nature is what's taking place. Ethereum's a different animal. Most of the protocols from these other cryptocurrencies are using Bitcoin. JP Morgan's now making calls. 15 months ago was the low in February of 2019 when JP Morgan came out with their coin and they stopped trash talking Bitcoin and Ethereum. They have their stable coin, and now they're talking about that Bitcoin looks like it's going to trade higher. So we see that there's a change going on. It's not a straight V line going back up, but that winter drought is behind us. There's a consolidation. High blockchain has rebounded dramatically, which I'm the chairman of. It's the most liquid stock and biggest market cap. And it's really a proxy for those that do not want to go on a crypto exchange and buy a crypto coin. That's what's taking place.
That makes sense. And I wanted to finish up with this because you're someone who inspires me. I know you inspire a lot of people out there. You've been doing this for such a long time. But when I talk to you, you could see just your analytics of how much that you care and how much you're into this. I mean, what keeps you going for so long? And I want to know this personally because I love what I do as well. I know you love what you do. But what keeps you motivated? Because you could just tell by this conversation how much you love what you do.
Life, family. Gratitude to how blessed I am, and is curious. I'm always curious to learn and improve. They say in our world, Frankie, either we win or we learn something. We never lose. That's my attitude.
That's great stuff. And I say the same thing too. At our job, we're lucky to always learn something. I learn something new every single day. It just keeps me driven. So if people want to learn more about you, Frank, why don't you talk about your Frank Talk blog? And also you have a slide deck that you mentioned earlier that on the airlines, if people want to learn more about that, especially for your JETS ETF, they can go to your website. But talk about your blog if people want to get in touch with you. I know that's one of the avenues that they could do so, right?
Sure. usfunds.com. It's really simple, like US money, usfunds, funds.com. Sign up for the investor alert, Frank Talk, and to get my thoughts for every week. We talk about gold and we talk about crypto and we talk about new trends taking place. And we try to have a unique approach to looking at the markets. We have we have followers in 180 countries. So it has a global reach. That's the easiest way to usfunds.com. And I think when our website is US Global ETFs for those who are interested in getting research on the airlines or the quant approach to picking gold stocks. So, and thank you for the opportunity of sharing my experiences with your listeners.
No problem. We went to gold. We talked airlines, talked Bitcoin. We talked everything today. And as always, I love having you on. I always learn something new, and I really appreciate it, Frank. Hopefully we'll get together soon.
Thank you, my friend.